Hello friends, welcome to my channel and thanks for watching this video. Friends, in this video, I'm going to share some thoughts on a CBOE Volatility Index, or basically S&P 500 Index, the VIX, the Volatility Index of the US market. Uh, so the thing is, what's the difference between this health crisis along with the financial crisis? We can't say financial crisis because the global economy and the Keynesians, what they are doing, that and the central banks across the world, they are pumping money like anything, right? So there is no liquidity problem. Maybe some countries does opt uh, some secure kind of measures, but nobody is denying that this situation is not critical and they are taking appropriate steps. And we do know that these kind of pandemics don't occur generally as it has occurred 100 years back. So we don't have that memory, because nobody, I mean, I could be wrong, but nobody in the financial market across the world do have that experience, what was happened in the last pandemic of Spanish flu, which occurred in 1920. If if somebody had, uh, it's fine enough, but I don't think that somebody from that era is alive right now, whether is a male or a female. And if they do have, they probably lost her memory to correlate that situation with the current financial market. So what I'm thinking when I look into the S&P 500 VIX, that it gives some indications, and it is currently giving some indications right now, unless something will happen again which could be more dramatic, that let's say, don't take me wrong in any sense, but let's say that the kind of deaths which are happening right now probably go on by, go up by 10 20 times. So unless those kind of things happen, I don't think that the current event is not known. So what we don't know is where we are going to find the vaccine, or probably when does that miracle happen. So that's, we don't know. But what we do know, that we are going to get it soon, and things will probably go right, because if you correlate the pandemic of 1920, that time it caused a severe damage across the world, not the entire world, but most of the developed economies or trading economies of that time. And the kind of deaths happened is huge. But at that time, human don't have that technological advantage, they don't have that healthcare, they don't have that medicine what we do have right now. So that's the biggest asset, or that's the biggest change which has happened in past 100 years. And if I correlate, there is this is a known fact that we cannot correlate the 2008 crisis with the current crisis, which is more a health related crisis, and have an cascading impact or domino impact on the and convert a health crisis into a financial crisis as well. But central banks across the world make sure that financial crisis, there is nothing called financial crisis, as enough liquidity is available right now. The interest rate are probably close to zero, or at zero, or below zero. So what I'm talking about is ZERP and NERP. So that is fine. But see, in 2008 crisis, when the crisis was going on, until the solution came, and the big minds across the world, the tycoons or the central banks, took the decision to pump in liquidity, did QE, and it happened, 1 year, one probably more than one and a half, because it's actually started, the stock price fall started uh, since to January 2008, and the decision came in March, probably in between February March 2009. So there was a time of around 12 to 14 months before this decision came, a solution came across the world, and the stock market recovered. So what I'm saying right now, that is the only point which I want to take from that situation, and could probably apply in the current situation, because till something did not happen, we don't know what should be the situation likely to be in the days or in the months to come. The same thing happened in 2008, that unless everybody came on board and took the decision to bail out, to do QE and all those stuffs, till then that financial situation was indeed an uncertain event. And you can replicate the same point here right now, where we have enough liquidity, but we do have the uncertainty of the medicine, of the cure, that when will it happen, we don't know. But what we do know, that people are trying on that, and we are going to get it soon. So obviously it will take some time. It's not a even though if you want to print money, it won't happen overnight, it will take some time. But what changes in between is the psychology. And when we apply that thing into the stock market is always a forward looking thing. Now I think I have spoken a lot. So what I'm trying to indicate here, because we don't have this much of in the data, because the VIX uh, is lengthy enough to make a trend. So what I want to share here right now is just see this one. Maybe probably somebody is tracking, or they do track these kind of things, obviously. But if you are new and if you are not aware, it probably helps you. The last time the VIX touches around 84, 85 was, you can see here, this is September of 2008, when Bear Stearns and Lehman Brothers crashed down. So this was the time when it hits there, and after that the VIX eventually came down over a period of time, and the volatility, the lowest counted volatility in all those instances where the line touches, is at around 9.4, and from 86 to 9.4 it took 2009 to 2017, probably 10 years. So if I can replicate that thing right now, I don't know what will happen. Probably in the moment we find the medicine, the volatility comes down very sharply. But I think, looking at this trend, that the volatility will eventually come down, because financial market has enough liquidity. The uncertainty is not about whether we are going to win this war. Obviously we are going to win this pandemic, but the timing of the medicine. And once stock market get the certainty that probably in this period of time, what I'm saying is, if let's say the scientist came up with the idea that we found something which is successful, and we are going to deliver it in 6 months, that's enough for the stock market to go on the upside. So that's what I'm trying to say, and I think you get an idea about the long term equity market, which is still on.